Hi, um, I'm Sherry Tolbert, and I work with a wonderful team that uh, is busy helping businesses with growth and profitability. And today we really want to help enhance your business's growth and profitability by just going through a few suggestions of things that you can put in place that you can spend just 15 minutes a day. It may be every day, but 15 minutes a day to get a better handle on your finances and feel more in control of what's going on with your business. So let's get started. We've been doing this as a team for, this is our 13th year as a group. I've been working as a CPA to businesses for 30 years, and which is crazy. But in that course of time, I've worked with really large businesses and really small businesses and get to see a lot. And in the meantime, I've also had my own business. And so I've lived through many things that I would like to help you avoid. I've learned by growing and by doing things incorrectly and then fixing them. And by seeing what other people do too, as well, whether it's good stuff or things that they wish they hadn't done. And so we're going to go through some things today to empower you to be able to do, to be more confident in your business and feel more comfortable with what you're doing, more in control. So we're all working very hard, and we want it to have the most impact and the most effect on your family life and your future, like you intended it to. So I am going to, let's see, Alexa, I'm going to share the screen or share the slides here. So you all let us know if, could everybody give us a thumbs up at the chat at the bottom of your thing, if you can, at the bottom of your screen, if you can see the slides. So Alexa, is it looking like everybody can see them? You can.
Yeah, it sure is. I could just, yeah, great.
Okay, good. That's always good to know we're all rolling along the same way. So we will get going. All right, how could you possibly get in control in 15 minutes a day? Well, the first major foundational piece to do that is to get your accounting in place and to get really skilled, dedicated personnel working on your accounting. If you don't have that, you're going to have anxiety, you're going to have questions, you're not really going to know what's going on. And I don't think that matters whether you're a very small company or a very large company. I have seen companies, even recently, who got to the end of the year and didn't know if they had a profit or a loss, had no clue. And they had high revenues. They were so busy turning the revenue, turning out the work, and doing that they didn't know where they stood. And it's really hard to coach the game if you don't know if you're winning or losing. You don't know if you need to do that Hail Mary pass or if you need to just hold tight and keep staying the course that you're on. So it's just crucial to get good, skilled accounting help working on your books. Okay, so let's say you have that in place, which most of you do, and that's awesome. Are you looking at it? Because obviously the person who didn't know if they had an income or a loss for the year, they weren't looking at it. They had accounting in place, but it wasn't, they were missing that real-time or near-time accounting. It wasn't being done on a regular basis. And because it wasn't being done on a regular basis, or in addition to it not being done on a regular basis, they had missed making a regular time to sit down and look at things and examine them. If you can sit down and look at them, and let's say we're looking for 15 minutes a day. So let's say your accounting person has a report to you first thing every third Monday, or however you want to schedule it, when you want to look at it. So you can sit down in 15 minutes, you can look at it and see what's strange, what looks funny, what, I like to do the P&L printed month by month. And that makes it really easy to see, did we miss a rent payment? There's no rent expense in this month. What's going on? We paid every month. Maybe the accounting's off. It's a good time to update those things. You can see just a little bit at a time things to fix and tweak, especially when you still remember that weird thing that happened when we had to do the refund, but the guy, this and that, those kind of stories, you've been there. So you can remember those because you're looking at your books regularly instead of trying to do it 6 or 9 months later and having to pull it all back out and figure it out again. So it's really important to have that accounting going on a regular basis and be looking at it. And I'll tell you, I think a lot of people, a lot of business owners don't look at their books. If it's running, we'll get the tax return, whatever, there's money in the bank, we're just going to keep going. Problem with that is things can happen that you don't notice. We're looking for things to be reasonable. Like I said, a monthly rent being paid, and the utilities. Are things looking the way they should? Suddenly payroll double in a month. You can see that there's some months that it's going to be maybe a little bit more because you have 3 pay periods in the month. But that would make sense to you. And you can say, okay, that's reasonable. But if it's double, that's not reasonable. Something's happening, something's going on. And so this gives you a chance to just stop and make adjustment for that. So there might be also additional questions to ask, like how did revenue get so high? Or why does it seem to be going down month to month? Just a little bit. Maybe we're not even feeling it, but maybe it's just decreasing little bit by little bit. And this is your chance to stop that before it becomes a full-fledged problem where bills aren't getting paid and things like that. You got to see things ahead of time. All right. Also, during this time, another 15-minute thing you can do is compare your expectations to the actual numbers. That's amazing. Expectations is my word for budgets. People don't like the word budget. It feels like you're being constrained or told what to do. And there's a mosquito in here. And you're being told what to do. And really what we're saying is this is what we expect. And we just want to know, are our results like what we expected? Because we're basing our decisions on what we expect to have happen. I'll give you an example. We have a vendor who we pay a fair amount to monthly, and it's just regularly taken out. It's based on usage, so the number is different, the amount is different, and I've been working with them for years and years, and so I trust them. Unfortunately, things got kind of messed up in their accounting, the way another product we bought. Anyway, long story, but I wasn't watching month to month. I was just, yep, they always take money out, and it's a lot of money, and so I had just kind of ignored it. But over time, we looked back, and they had taken out $10,000 that they weren't entitled to. It was a product that we had canceled. We didn't end up getting most of that money back. And if I just been stopping month to month and looking at my expectations, I wouldn't have had that problem. That was an expensive lesson to learn. When I say I don't have time to do this, this is not one of those things. We need to be looking and making sure that all those things are going according to plan, and that you could do in 15 minutes. You could just sit down and look, what did I think was going to happen this month? What actually happened this month? And you can even assign out to someone else. Why are these numbers different? What do I expect not equal what happened in the business? And that way, that's an easy thing for one of your team to do as well. And just go figure it out, and we can look at it. Maybe the accounting's off a little bit. Maybe the bill didn't come through. Maybe a payment got lost in the mail, and so we ended up having to pay twice this month. Whatever it is, or maybe you're just being misbilled. But it gives you a chance to recover while the impact is small and you're in control of it, rather than having to really deal with a big problem.
Yeah,
So,
Sherry,
yes.
it really does pay to take that extra 10 or 15 minutes. It could end up saving you a ton of money in the end. And so, yeah, setting that time aside, I think is super important.
That's excellent, Alexa. And it also, those are things, what I'm having to tell you about that $10,000, it's embarrassing to me. It was not just the cost, but just like, gosh, how could I have let that happen? It looked like I was, just not on. So it's embarrassment. It's just having the emotional angst of having to work through stuff like that. And yeah, it's one of those places where you think you're saving, but you're not. So so we're going to challenge you guys to pick one of these and write down what day of the week or what day of the month you're going to do this for 15 minutes. So just take a minute to do that real quick. And then we're going to go on to the next one. You know, a big part of going to learn things like this is actually putting them in place. Just hearing them doesn't get you anywhere. Hearing them and putting something in place is going to be very helpful to you and make a difference for you. All right. Okay. Then the next thing that's important is to have some allocation to key areas of your business. We really recommend using Mike Michalowicz's Profit First method. Mike has written a wonderful book called Profit First. Mike is an excellent, he's like a business engineer. He is a genius with businesses, and he's excellent at writing down the concepts in a different way, in a memorable way that will be really helpful to you. But if you can read the book Profit First, or better yet, if you can listen to the Audible version of Profit First, you will enjoy it. It's read by Mike himself, and he's a zany, crazy character, and really makes it memorable. And he has lived what we've all lived, and has a good take on it. His thought is that the typical way of doing things is you get revenue and you subtract out all your expenses, and what's left over is profit. Well, mathematically, that's correct. But he has dialed human nature into it and said, well, let's do this. If we let that equation go that way and let the expense, whatever the expense is, and then whatever's left over after that is for the owner, the business can get fat. The business is a monster. It will eat anything that you have, and you know it too. We've tried to make things nice in our business. We want it to be efficient, and there's just a never-ending, I don't know, set of emails as well. People telling you, you need this, you need that, you need this, and the business can eat more than it needs to, and it keep you too skinny. So what Mike suggests is instead to take your revenue, subtract out the profit that you need. So let's say 10% profit, and everything else is for the expenses for the business. So that way your profit is guaranteed, and the business is going to have to live on what it has left over. And it works really, really well. I have used the method myself, and it has been remarkable, the difference it makes in how I approach my business. So in this method, what he does is he takes it's a system very much like the old envelope system, where you have envelopes and you put money in for your food, money in for your entertainment, money in for clothes, and you just spend out of that envelope for that category. So what Profit First does is you set up bank accounts and for the various allocations, and the first one always is profit, and you decide a percentage that you're going to put into profit every time. So starting with 1% profit, put 1%, you get your revenue, you take 1% of the revenue and put into profit, and then there's savings, operating expenses, and then owner's taxes. The theory is that the business is supposed to be working for you, and you not for it. You're supposed to be owning it, and so it should take care of you, and it should pay your taxes along with your wages. And I also think you ought to have long-term care insurance in there as well. It is the one thing that you can deduct for the owner themselves and not be fair and give it to everybody in the business. It's the one perk that it's just going to help you. You know, you're working hard and you're risking your capital and your livelihood to run this business. So long-term care is a good thing for the business to provide for you, as well as tax deductible. Okay, then some other accounts that you might have are payroll. A lot of our clients have this. I do as well. So when I know what the payroll number is going to be, the wages and the taxes, everything for that payroll, I move that money over into the payroll account. And then nothing's going to bother that except the, the payroll charges. And so that is all safe and taken care of. I don't have to worry about it. Then another one might be rent expense. I've done that as well. I have an account, and at a certain time of the month, I know by then I need to have funded that rent expense account so that it's ready the first of the month and I'm not having to scramble looking for rent money. That's all running. Another one that's kind of fun to have, depending on where you are in your business, is if you have capital improvements that you'd like to do, or some equipment you need to buy, or a large software purchase, something strategic. Might have an account for that, kind of a savings account for that next big expenditure. And during the month, as you go through revenue, you'll have a percentage set up for each one of those, and you move the money into that account. That way you're setting yourself up for the future, and you're not having to go on credit if you run it this way. Speaking of credit, running back to the profit account before, the profit account is only for the business owner, and it should never be plowed back into the business, invested back into the business, all of that. That's totally against the thought of the profit account. The profit account needs to be really for the owner. The only exclusion for that is if there is debt. And I will tell you, I began to run up some debt in my business kind of accidentally. And so when I first started this method, my profit went to pay off the debt. But it was lovely knowing that I had some money to get rid of that mistake, clear it off, get to where I could start over. It was a lovely thing. And now the profit is in place for me to use. So that we highly recommend. The whole system we highly recommend.
Yeah, Sherry, I think you mentioned before the split up of the bank accounts would have been an advantage in the tracking of that vendor that you had been paying, and it had just been a mechanical transaction. But if that would have been split into an additional account, it may have been able to wave the flag a little before getting in so deep.
That's right. So it's a way of setting your expectations. So we expect that vendor to charge this much in the month, and we could always put a little bit extra, but it wouldn't have been the double that they ended up being. That's exactly right. You can use it as a budget constraint that you don't really have to think about. You just put that much money in, and when that money runs out, what's going on? So excellent point, Lexa. That's awesome. That's awesome. All right. So now with this, pick one of those, or pick something that you're going to take from this. Even the best thing might be just to listen to Mike Michalowicz's Profit First on Audible. You don't have to be able to spell his last name. Just put Mike in Profit First. It'll come up anywhere on the internet. So, but write down something you commit to yourself to do from this. I'm going to give you a second, because you want to take something from this that's useful. This is your time. All right, thanks. All right. Okay, the next thing that would be great to do in one of your committed 15 minutes a day would be to review the reports that you've set up that you want to see, and some key items, some key comparisons. So one of them you might set up would be the profit and loss. Like I talked about before, the monthly profit and loss. That might be a report that you either generated in your system on, the 15th day of the month, just to see where things are, or you get someone else to print that for you and, send it to you on that day, and you stop and look at it. The balance sheet would also be helpful. Statement of cash flows is good because it shows you what's going on with your cash, how much cash your operations is generating, and then whether it's going to investment or finance, or if it's just going out of the business as a draw for you. But it lets you see what is happening with the cash. That's one of the most frequent questions I get from business owners is, where's all this money going? So the statement of cash flows is really helpful that way. You could also set up something where you see new client sales. You want a steady stream of new clients, and the speed that you're able to handle right now. Maybe you need 4 or 5 new clients a month, or maybe you need 4 or 5 new clients a day. It just depends on what kind of business you're in and the level of sales that you make. the size of sales. So is that amount of leads coming through? Are you getting enough phone calls? We had something happen to us in the last 6 or 8 months where, gosh, we were so busy. We weren't getting any phone calls though, but that was fine. We really couldn't take on new customers, and that was fine until we started hearing from our current customers. We've called you and left you messages and y'all haven't called back. Well, that's not like us at all. We couldn't even imagine that. It's like, we didn't get any messages. Well, we knew those people weren't telling us, falsehood. So we went back and looked, and lo and behold, we didn't have access to our voicemail on our phone. So we were missing messages, and people were actually leaving messages, and we just didn't realize it. So if we'd have been looking maybe even at the number of phone calls a month, maybe that would have been a key indicator in that circumstance. Just a touch point. Say, is this reasonable? What's going on? So we can investigate and figure out what's happening, because certainly we didn't want to not answer the phone. Want to look at returning client sales. It would be very helpful to know if the clients that you've had for years and years begin to dribble away. That's a really good diagnostic tool for you. Or if they're staying at a higher rate than they ever have before. That's really cool too. That would tell you something and be easy to go back and look. What are we doing differently that they really like? Let's do more of that. So these are things that you can think about. Another one would be sales and gross profit by category. We recently did this exercise with one of our larger clients, and had 5 or 6 lines of business, different things that they sold, and whether services or products. And once we compared the cost to the revenue generated by that line of business, it was really easy to see which lines were very helpful and really contributing to the cash flow, and which lines were really not over the year. And so it's a time to stand back and say, do we want to beef up this line of business so that it is generating, is contributing, or is it taking too much time and we just don't care? Let's just cut it off. But to continue doing it and losing money is no good. So when it's all stacked together, it's not easy to see. So this is a good, simple thing, again, to just get somebody to separate that out for you and give you a report in the morning so you can look at it, take, one time a month. How are we doing? How are things looking? And give you that diagnostic so you can make good management decisions and be running your business the way that you intend. All right. Next one is debt level and current trends. And I told you one time I ran up some debt, and I'll tell you how it happened. We were busy. We were so busy. And, cash doesn't always flow just the way you want it to. I did not have a line of credit in place, which is probably just as well. And some bill came in, and I was like, oh, we'll just put it on American Express, right? So I just put it on American Express. I really didn't think about it again. I didn't feel it. No big deal. But it happened a couple times, and it was kind of no big deal in the back of my head. Yeah, we'll got to clean that up. And I turned around and I owed $20,000. I don't even believe in doing that. The business shouldn't be running up debt just on daily stuff. I can see if I was buying a building or making an investment of some sort, but just on daily running of the business, it should be beating itself. So without knowing, I just didn't go back and look. And so that's what I'm saying. We could say, okay, I have these credit cards available, or these debt functions available to my business in case of emergency or whatever, as a backup that we never want to use. But have I put anything on there? Is that getting paid off? Was that just a really quick thing and it's just gone, or did we forget about it and we're just kind of paying the minimum and proceeding in a way that we didn't want to? So just stopping to look, where are we compared to where we were before? How are we doing? On the other hand, you might be paying down debt, and it's awesome to look at that. It makes it so much fun, make that go away. Like I said, erasing that mistake, getting it out of the way, or that issue, because a lot of times things happen. I know I've had things where I've hired people and paid a commission to somebody to hire them, and that went bad, and it was just awful, and it was on the credit card. Anyway, it was nice to get rid of that mistake. So just to give you encouragement, give you a good handle on what's going on. The next thing is a really interesting thing. How on all of your employees, not including you, compare the payroll dollars to revenues. I know when I looked back at the years when my business was really lean and really struggling, And I wasn't getting paid much. Was really, the business was fine. I was really struggling. Compared the amount of payroll I was paying out to other people to the amount of revenue I had. And it was a really high percentage. Whereas now things are running well and things are doing good. And my people are getting paid even better. And it's a much better ratio. So it's just a good thing to see, where are we on this? How many people is it taking to make this money? Does that make sense? Sometimes, I know when people start businesses, they either start super lean. I'm going to do it by myself. I'm going to do it by myself for 3 years or whatever until I'm making enough money to have more people. Some people start it like that, which kind of is the wiser way, really, if you can manage it. Or maybe they just staff up. Maybe they're like, I have money, I need all these people, and they get started. But you can spend a lot of money really fast at the first of the business if you don't have revenue coming in. So this just gives you a way to see, where are we and where were we before, and are we going in the direction that I intend for this business to go? Another one is revenue by hours. Any number of things like that. How much have I invested in the business? What kind of revenue is it turning over every month? Those kind of things, just to give you a touch point and see, is this making sense for me? Is this business working for me? Is it growing? Is it healthy? We're taking its blood pressure, we're checking its oil, all those kind of things. But you know, your business has a little bit different personality, a little bit different things that are important. So what is happening? So in 15 minutes, any or all of these things, you could have just one a day. You could see that's easy to do. As long as you have the report set up, just get it done. So I'd like you to take just a minute, and if you can write down one of these things that you'd like to do, or maybe another touch point in your business that you would think of that you could write down and just check on a regular basis.
You know, Sherry, it's so easy to get kind of lost in the day-to-day, especially if you're running and just busy and you're just trying to make it from the morning to the evening.
That's right.
It's easy to get lost in all of that, but it really, really does make a lot of sense. And I think that, you know, all of the business owners would really be able to look back and say, wow, I'm really happy that I did take that 10 to 15 minutes. And I picked out these specific things that I know are going to improve my business and make me see some things that I can't see when I'm in the midst of the day to day.
Oh, that's good. How do you feel about what I was saying, getting team members to do pieces of it? Do you think that would work?
I mean, I know from our experience, the more eyes, the better, because it's really interesting to see what each individual team member can bring to the table. Somebody may see something that I wouldn't see, or, you know, they have a different perspective because they're working in a different position. And so I think to have different perspectives all brought to the table, you can really form a new answer or a different way of doing things in a way that you haven't personally thought of. So I think it's great to include everybody if you can.
Well, and I like that too, because I've never thought I was the smartest person in the room. I love having other people's opinions. And I know in our group, just having everybody come and be responsible and the win is everybody's win that way. And we can all grow and improve and everybody can enjoy that, having a part of that success. So that's fun too.
Yeah, I think it's part of creating that culture. So it's fun and it makes everybody feel like a part of the team.
Yeah. And everybody gets to bring their best. And there's not a human being in the world that doesn't like to just do their best and make a difference. Yeah. I think it makes life good. There's nothing worse than working somewhere where we're going to do the same old terrible thing next year and the year after. I like, let's make it better next year. Let's make it better next month, all those things. So all right. Thank you. Yes. All right. Here's another thing you do in 15 minutes is track sales data points. And there's all kinds of data points that you could track. You could, like we talked a little bit about before, maybe new contacts per week or per month, depending on your business. How is that going? Is that steady? What is your sales related to your ad spending? and how much you're spending on your website and other marketing. How's that looking? I know when I first started in business, I didn't know anything about anything. And this beautiful magazine offered to run an article for me, for $10,000. And I thought, well, you have to advertise when you have a business. So it was a beautiful 2-page spread. It was shiny pages, and it went to all of the homes in the area that had, relevant revenue for what we were doing. And I can't even tell you, so many people came up to me and said, Sherry, I saw your article. That was wonderful. It was great. And I did not get not even $1, not $1. Nobody, didn't produce anything at all. Not one thing. So you want to be always comparing your ad spending to your actual sales, because that's the point. The point was not to get my picture in a magazine. I could have picked a better magazine for $10,000. I'm just sure of it. So anyway, but you want to be making sure all that stuff is working, and that you're getting calls from your website that you intend, and all those things are working the way they're supposed to contribute. All right. Another thing that you want to look for is the gross revenue by product line. And we were talking about that a little bit before. You can have something that you're selling a lot of that's just not making you any money. And it could be creating a ton of work. You could be doing 80% of your work to support this one thing. We had one client that sold equipment. And in addition to that, he also sold parts to repair it. They did service, but he also would mail the parts out. And when we talked about it, we got into it, it was just taking a ton of time for them to mail those parts out. And it was taking boxes and tape and all that stuff and personnel to send those parts out. And when we got into a deep conversation about it, he was losing money for all the parts he sold. And if you think about it, he was also losing the service, because he didn't get to go do the service because he was losing money to help the customer do it themselves. So it just, and he was passionate about it, and he was really trying to help people. But had he stopped and looked at the cost and the benefit from it for the business, he wouldn't have been doing that. So that would enable you to make a different decision. Or you could decide that I'm going to do it anyway because I think it supports something else in my business. But you're making a decision, and you know why. And then as you get farther down the road, if you decide that's wrong, or if that's right and I need to beef it up, then you can do that. But you'll have the building blocks of what you're doing and the rationale for what you were thinking. It gives you room to learn, and it gives you room to improve. So the next one is just thinking about what your anticipated revenue is going to be for the year and your anticipated expenses. I was talking to a gentleman the other day, and during COVID, his revenues went down almost 2/3. But his expenses were a lot harder to dial back, because you sign contracts and you have things that you're supporting and that you've made decisions. But at the first of COVID, for him to see the impact on his revenue, he can begin to dial back those expenses. We all have it. Some things that we do just because, oh, that would be so nice. It's just a little bit easier or a little bit nicer, and it's not unreasonable. But if the money's drying up, then it becomes extremely unreasonable, and we need to close every hole here and make the ship tight. And that gives you a chance to do that early, so that you're not struggling through something like COVID, or heaven forbid, another one like that. But anything that could happen to a business or the economy or whatever, that we need to be able to react as quickly as possible. And if we're looking at what's our anticipated revenue, is it in line with our anticipated expenses, and not only anticipated, but actual, how's that going, so we can be able to react. So what is one of those things that you could stop and maybe put in line for your 15 minutes that would be helpful to your business? You've all been through COVID. You saw the things that changed. What do you wish you had noticed more quickly? Maybe you can put that in place. some sort of sales data point that would give you a heads up. We got something that's off.
Yeah, I really think this last year has kind of opened a lot of our eyes and made us look at things from a different perspective. So it's been
Well, that's
learning.
That's true. That's true. It's, gosh, you think, oh, nothing like that could ever happen. And it's just been an amazing thing. Suddenly we can believe that. Yeah, I think, what's the comment that's good times cover up bad management, bad times expose it. So I think this pandemic, assuming your business made it through well and everything, or you wouldn't be here on this webinar, what are you learning from it? What can you tighten up so that when you go into good times, you'll be doing so much better than you were before? There's no sense in wasting this good learning, this good teaching moment, right? Go ahead and grow up and run your business a little bit more professionally. Run it like you mean it. I had a comment one time that said, what would you do? What could you do that if you hired somebody else to do your job, what would they come in and do differently? What would they do differently if you hired them? And then do that. Well, that's a pretty good idea, because you think of that person as once removed, and they would have a boss that would be you, and they would be a little bit more accountable. And there's those things that we're all not doing. So pick one. So, all right. Okay, let's see what this next thing is. Okay, this next thing is different, and I don't know that I've heard it from anybody else. I think we sort of made it up. Maybe, I don't know. I've never been taught this anyway. It's job responsibility mapping, and it makes all the difference in the world to our business. At least annually, to map out the client or the project journey through the business and all the touch points. And the way we do it, it's a one-sheet picture. And from the top to the bottom is the chronological order of what happens. So the client comes in, they sign up with us, they provide us information, that kind of thing. Okay, all the way down to the bill is paid and the job is done. Then going across the page, we have all of the people that touch the project. The client touches it. The front office touches it, billing touches it, the team that works on it touches it, and then I touch it. And so any given piece of the chronological order is touched by different people. And so we map that out and draw it in a picture, and I'll look at it and say, okay, how would we like this to run different? Because last year we didn't like this little piece. It didn't do right for us, or it was too much trouble for the client, or somehow we always get to the fourth step and we don't have something that we need. So how do we make sure we get that earlier in the steps? So if you can do that, just do a picture of what is happening. What is happening in your business right now? And have everybody look at it and stand back and say, what are we missing? What's falling through the cracks? Is there somebody that's not getting billed sometimes? Is there somebody who's not getting responded to? What did we mean to do? A lot of times, I hear from clients, we used to do that, but I guess when so-and-so left, it just quit getting done. Or when I reorganized, we just dropped that off. I know that happened to us recently. We're like, why do we not have this information at this point anymore? And we realized we had changed something else about our system, running the job through, and that little piece just ended up going with the stuff that went away, and it shouldn't have. So we're able to put that back in place. But this job responsibility mapping is going to let you see as a team, what is it that we need to do? And in our business, every year, except this year, because we forgot, we stop and look at this and say, okay, what's coming up that's going to be different in the year going forward? And how do we want to change it? How can we do better for our clients so this is easier, better, faster, and that we're getting everything we need to make it very efficient and very helpful? So it could be you looking at it, just how the client feels, how the customer feels about working with your company, the service, the efficiency. I know restaurants have made the payment method easier. And I really like it that I don't have to just give my credit card to somebody and they go off and they're back in 7 minutes and I don't know where all the credit cards been. And I can just sit there and do it at my table. And I can do my tip too, personally by myself without kind of feeling pressured to do the tip. And I'm more generous that way. But they've made that much easier for people. I know some restaurants have even they just leave the thing on the table. They don't want to come back and bother you. And this is less service restaurants, but I can just check out when I'm ready and leave instead of waiting to hail someone down that might have gotten too busy over time. So there's also things that are like the service scheduling. Some businesses is great if you can get online and just schedule your appointment. Others, it's much better to do it by phone or work together to get it done. So just working through those things, looking at your mapping and seeing what else can we do for the client? How do we really want this to feel? How would we want it to feel if we were going into this business, and how would we want to be treated and how would things be taken care of? So think about doing that. There are pieces of it that are interesting, but I'm going to challenge you to do this whole job responsibility mapping. Just give it a shot. See if that doesn't bring things to your mind that are really helpful. All right. Okay, you can do this. You can know the numbers of your business and be more in control. You can go through these suggestions yourself and with your team and really keep yourself from having the nightmares and the stress that you normally have, and be more and more in control of your business. Or you can ask us to help you. I know that I have hired a marketing company, and they are the ones that got this webinar set up. They've taken care of the details because I don't have time to get it from A to B, and I also don't have all of the expertise that I need, but I know what I want. And so I'm able to get more done outsourcing that and using that for them. They help me make sure I've got my homework done on time, and that I've reviewed the articles, all those kind of things, so that things go the way I intend for them to go. Maybe you need that too. There's no harm in it. What we'd like to do is be able to step in with you and help you go through this. This is the Foundations program, getting the basic things in place for your business so that it's running the way you intend. Our fees, $3,000 for 3 months, and we will work with you and do everything possible to get you from A to B and get you in a place where you can be comfortable and have more control over your numbers and have a better direction in your business. So got this website. You can just log on to this and let us know that you're interested, and we'd be glad to help you out. Thank you so much for joining us today on this webinar. Hope that it's been really helpful to you and spark some things in your mind, things that you can do for your business, because you can do this. And we want to be on your team to help you get there.